and today we're going to talk about our current market condition, weekly strategy roundtable, discuss FOMC meeting tomorrow, what to expect. Is the market going to continue going higher, or are we going to have a pullback? What's the size of the pullback potentially, and how to position yourself into the rest of the year. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. My background is in technology. I worked as a CTO and executive vice president at several fintech startups here in Chicago, broker-dealers, some of the hedge funds. Since Options Express was one of them, went public, I decided to manage my own money, and I've been doing that for over 20 years now, mentoring and teaching subscribers how to trade stock and options. We have Keith, who joined us from Options Hotline, and he's part of our live trading room. And his background is more on proprietary trading. He worked with a hedge fund, market maker. So between two of us, we bring both the technology side, AI, but also how to manage your portfolio and optimize your portfolio. So that's our background and my background. Disclosures are important. I'm going to go through specific trade signals. So I encourage you to visit optionscreening.com to understand the risk and suitability associated with trading stock or options. I'm not a financial advisor, and I'm here to show you what I do in my own account for educational purposes only, in general informational purposes only. All right, before we jump into trading psychology, one of the reasons behind Yellow Tunnel is trading psychology. Not only how to predict the stock market, but also how to predict your behavior, right? Very important for trading. So let's take a look at the market first. So we had a retail data today. It was better than expected, didn't really move anything. Everybody's concentrated on FOMC meeting. You can see the 10-year yield, 2-year yield, 5-year yield, very similar price patterns. We are basically retesting the Liberation Day's low, right, back in April. There's the expectation that Fed is going to cut interest rates. Expectation is 3 rate cuts this year, maybe 25 basis now, 25 basis in November and December. And then 75 basis points, 3 rate cuts next year. Tomorrow, I think Powell is going to basically, I think, almost 90% probability that at least 25 basis point cuts. 50 basis point cuts, I think probability is still less than 40%. But I think most economists believe it'll be 25 basis point cut. But the forward guidance could determine the move in the market, because we had a few months where unemployment data is getting worse, right? Employment data is getting worse. Unemployment numbers are going up. Initial claims are going up. So people are going to listen very carefully to Powell's speech tomorrow. And you can see yield is oversold and potentially could revisit the, it's already at these low levels. Dollar continues to be weak. It looks like it's also breaking down going into the FOMC meeting. All right. I mean, it was trade away from the United States first. Now it's more of a state of economy and perception of employment, GDP. So you can see the dollar is also already below the Liberation Day and retesting July lows. Right. So sitting on the edge. High yield is kind of the opposite, right? So planned ample of liquidity, high yield continues to go in higher, right? Maybe it was expectation they're going to stop the quantitative tightening, and since the debt ceiling, right? The negotiations of budget, right? Government budget is also due at the end of the month. Potential looming. I mean, the probability of government shutdown is increasing. So not on the headline news, but it probably will be there in the next couple of weeks as we're approaching the deadline. VIX is slightly higher, right? So we've jumped in the past 2 days because of the expiration, right? We also have to keep in mind that we have VIX expiration tomorrow. Probably one of the reasons why VIX is up 2 days in a row, even though stock market is at QQQ is at all-time high. And then we have equity expiration on Friday. Semiconductors continue to grind higher, new record high in semiconductors, new record high in QQQ, new record high in spiders, right? Small caps pulling back today again. Interest sensitive sectors, there's a strong rally since the April. And for now, regional banks, small caps, home builders, they're all pulling back with anticipation that maybe people will be disappointed with the one rate cut, right? And so interest sensitive sectors started to pull back. But also gold started to pull back, gold miners and silver slightly pulled back. Gold continues to grind higher, right? So at some point, it can be that the bond market, the precious metals market and the equity market, they're all going in the same direction, right? Either gold is going to pull back, right? And treasuries, TLT, bonds are going to pull back and equity is going to rally, or vice versa, right? Gold and bond market are going to continue to rally, but equity market is going to at least have some kind of a short-term pullback. So that's the gold market. If you look at our platform, we have aggressive power trader. The model runs every day, right? Every day. So 8 p.m. yesterday, 8:30 a.m. We're posting the results of the model. You can see today Caterpillar was one of the signals. So Caterpillar is doing better than the market. GLW is actually slightly positive. Morgan Stanley is actually slightly negative. And for the spiders, we predicted today 658 to be support, 661 overhead resistance. You can see a very narrow, tight range, right? Because before the event, usually volatility contracts, right? And then after event, it could expand, right? So you can see only 0.5% between predicted low and predicted high, right? These are the buy and sell signals for today. For the next 10 days, it sees potentially getting to 672. So model basically says next 10 days, if the outcome of tomorrow's Fed speech and the expiration process, if it's positive news and more than 50% like what Powell is going to say in terms of state of the economy, employment, tariffs, inflation, then we could break out of the 660 range and get to 670. So model sees that. But longer term prediction model actually sees that we're a little bit ahead of itself, right? The market is overbought ahead of itself. And if we revisit 640, 630, one should not be surprised, right? Because market is overbought. Model obviously is not trying to predict what Powell is going to say, how people are going to react. It just says based on the current price action, short-term momentum is behind the bulls, agreed. Medium term, a little bit too far, too quick, one can expect a pullback in equity. So looking at that information, potentially I would, either raise cash or take profit on some of your long position, maybe hedge your positions. But this is something that the model is telling you, right? And this model runs every day, and you get prediction. If you're looking for new signals like Morgan Stanley, Caterpillar, you can see these stocks continue to grind higher, right? Caterpillar is trying to break out. Morgan Stanley actually broke out, and GLW also broke out from the long-term model perspective. So then once you look at so this is Yellow Tunnel proprietary model based on learning on historical price movements, right? Earnings, right? And making forward prediction based on the neural networks and latest advances in AI. Now I'm looking strictly at the positioning, right? I'm looking strictly at the positioning. Supply and demand for options contract, futures contract. So SPX gamma is 6,500. So you have a strong support 6,500, meaning that as long as we're staying above 6,500 tomorrow or this week, right? After we have VIX expiration and we have equity expiration. So most of the positioning on SPX, right? We're talking about $105, $110 billion worth of positioning, which obviously could move the market just spiders alone. But all of this data expires on September 19, right? Even if you're not an options trader, I would still look at the positioning data, at which strike prices, at which expiration months people are positioned, right? Not a lot of position in November or October right now. So once all of this data expires, basically what it tells you that positive gamma is above 6,500, right? This red line. All it means is that as long as you're staying above 6,500, then the dealers will create, stabilizing the market volatility, right? Dealers are considered not long gamma. They want to be neutral. So dealers will, I'm reading this, sorry. Right, I'm reading this description, right? So the dealers, right, there's always buyers and sellers. Dealers are supposed to provide the liquidity, so they will stabilize the market. If we drop below 6,500, right, on Friday, Thursday, Monday, we're below 6,500, then you could have acceleration to the downside. So personally, I would watch 6,450, 6,500, right? If we drop below these levels, then the sell-off could accelerate. And let's see, 6,500 on SPX is what? Is it close to 50-day moving average? I mean, getting there, 20-day moving average. So we're talking about 20-day moving average. So yeah, I mean, obviously 20-day, 50-day moving average. As long as we're above 20, 50-day moving average, bulls are in control. If we drop below 50-day moving average, you could have a pullback to 6,200, right? Even maybe 6,100. So all of these scenarios are possible. So if you look at the forget September, we're already a few days away from that. October and November contracts. If you look at the November and October contract, again, based on the supply and demand, you can see that one standard deviation, we are at 6,700, 6,750, 6,800, right? So scenario number one, we're breaking out, right? Now we're talking about October, November, right? End of the year. So last quarter, right? October, November, December, Q4. So either end of October or end of November, we are above 6,800, scenario number one. Right? AI, we've seen earnings from Oracle, we've seen earnings from Broadcom, from NVDA, huge demand for AI, utilities continue to rally, we've seen chart patterns for peripheral storage, like Seagate, WDC, Western Digital. All these stocks are kind of in a vertical move to the upside, right? Some of the quantum computing companies. So you have scenario number one, right? And double-digit growth on earnings. We're signing an agreement with China on TikTok, and tariffs is a one-time taxation, and inflation is under control. So scenario number one. Scenario number two, we're trading in a range, right? Short term, I think there could be a pullback, right? One standard deviation would be around that level, 6,400, 6,450. 50-day moving average. Right, so we're trading somewhere between 50-day moving average and the current levels. All right, that's scenario number two. Kind of a pretty wide range. One standard deviation, right? We're talking about one standard deviation move. And, I always in these webinars say, think about trading at statistics, right? Back to basic statistics class. There's no such thing as market doesn't move in one direction, right? There's always pullbacks. It's not a linear format. It's more of a kind of a bell-shaped distribution. You can be biased to the bullish side. You can be biased to the bearish side. You can be market neutral. But there is always this probability that we could be at 6,400 or we could be at 6,800, right? And that's kind of that one sigma move. So scenario number three, we break through the 50-day moving average, right? Maybe revisit 200-day moving average around 6,000, 6,100, right? So it's steeper pullback. I mean, unemployment data, right? We have initial claims on Thursday. We have expiration months. If unemployment starts reaccelerating faster, right? If the unemployment rate starts rising faster than the Fed anticipates, and the rate's going to start dropping faster than everybody's anticipating, then you can have scenario number three, right? Inflation is under control, so there are no signs that inflation is picking up. The only, I think, the elephant in the room, right? I think is employment. Employment, there's different signs, definitely signs that the economy is slowing down, employment is cooling off, and at some point, you could start, the unemployment data could start accelerating, right? Accelerating in negative side, so you have scenario number three, right? Unemployment picks up. So those are the three scenarios. And when you trade, you want to kind of determine position size, right? The most important is what is the appropriate position size. And if you don't go through the positive and negative scenario, right? And say I'm bullish to the end of the year, I think we could actually get to 6,800, maybe not in October, but end of November, December, I think we could be at 6,800 or even more, right? But then how much money am I willing to risk to support that opinion? That's when you need to go to this positive negative rehearsal exercise so you can determine position size. So I encourage you to do this. And if you don't think about months or weeks, if you think about, let's say, 15 minutes, 30 minutes, 1 hour, it's the same process, right? You can look at the supply and demand data for 0 days till expiration options, right? And you can determine what the range or average true range, right? You can look at different statistics, signals, or models to show you where the support and resistance levels. But then you're not guaranteed that these levels will not be breached. So then you need to decide, okay, how much money am I willing to risk, whether I'm doing day trading or swing trading, momentum trading. Those exercises are extremely important. Tim, what's the difference between TradeSpoon? I'm a founder of both TradeSpoon and Yellow Tunnel, right? This is a Yellow Tunnel webinar, but I'm both sites are very similar. I'm founder of both companies. Yellow Tunnel will spend more time on trading psychology, right? There's a lot of more content on how to predict your behavior, game theory, prospect theory. So we talk about more about trading psychology. But the models are very similar, services are very similar. Sometimes there's more signals. A lot of people have, subscription to both, because here for each of the services, you only see signals in that service. So aggressive power trader, sometimes it's 3, sometimes it's more signals. TradeSpoon is always 3. TradeSpoon also goes bullish and bearish signals. On Yellow Tunnel, only bullish signals. So there are some differences, but they're very similar. Tim, thank you for the question. So that's my view on the market, right? So how many of you, so let me pose this question to everybody. How many of you think it's scenario number 1, we're making new all-time highs, so we're going to move more than one standard deviation to the right. By end of the year, we'll be at 16, almost 7,000. How many of you say, no, we're going to close the year, or November, end of October, end of November, we're going to be somewhere in the middle, maybe 6,600, maybe 6,400, maybe 6,700, right? Next couple months. And then how many of you say, no, we're going to get to 6,000 by end of the year? So 1, 2, or 3. Charles, David, George, Abraham, JT, Dr. Simon, Oli, Ron, Tim, Wanda, Chuck. All right, a lot of people today. How many of you say 1? Ron, 2, 2, 2, 2, 2, 2. Okay, so everybody said 2. Most of you said. Nobody said 1 and 3. I'm going to go with 2. I think October, September is usually volatile in terms of returns. September is the worst month when it comes to returns, usually negative. On average, it's negative. Doesn't have to be this way. The market is overbought, and I think people are not hedging. You can see October, not enough, only $20 billion of hedging in October, and that's not enough to support the market by historical means. So I would say there's a risk to the downside, but I still think the pullback will probably be shallow. 6,400, maybe 6,300. And I think at those levels, buyers will step in and push the market. November, I would not be surprised at 6,700 or 6,800, November, October, end of October, end of November time period. All right, so how do we help on Yellow Tunnel? So again, I explained, every day there's signals being generated using the AI. So you can see my orders and positions. Some of these signals I trade. So let's say spiders, right? I've been trading spiders, looking at these support and resistance levels, right? If I see there's a lot of positioning at 6,600, right? Biggest position 6,600. So maybe it makes sense to sell call spread, right? Short the volatility or sell. out of the money options. I wouldn't probably do it going into the FOMC meeting, but using shorter dated options, 0 days till expiration, then that's been, you know, some of the trades using predicted, you know, signals. You can also trade options. We give you options for some of the signals that are being generated. And you can see orders and positions. You can enter a phone number. You get a SMS message. So that's aggressive power trader. You can trade on your own, right? Some of these signals I trade, some of them I do not. Weekly power trader is the same thing, right? Every week on Friday, on the weekend, Sunday, model generates the signal, and you know, Meta was a signal for this. On Monday was generated, so Meta is doing great. Caterpillar, Home Depot, Micron, Pulte Group. So some of these positions I'm in. Like if you look at the orders, you know, spiders again, and then Micron, right? I enter the Micron, Apple. But again, these are longer term signals. The model runs on Sunday, right? And the idea, the signal is valid for a couple of weeks. I mean, you can hold it for maybe a month, right? But the idea is that this is anywhere from 5 to 10 days signal. So usually I hold these positions 5 to 10 days, right? Sometimes 15 days. Target gain anywhere from 1 to 2% using underlying stock price. You can also trade options, right? We do provide you option, either weekly or monthly, depending on your trading style. Signal's been over 75% accurate, and the idea is to have 4 active positions, 2.5. This is the most important, right? You're going to a FOMC meeting. It's important to look at your drawdown, right? Market could be up, you know, 1 to 2% tomorrow. It could be down 1 to 2% tomorrow. It's very important to look at your drawdown, right? How many positions you have, position size, so you don't get caught by surprise. Dynamic power trader is actually all of my positions, right? So I have Apple, trying to get into Caterpillar. I have STX, right? And you can, same thing, you can go to orders, position, SMS messages, and you will get alerts every time I trade. So I have Apple, you know, I close half of the Apple position today. I close spider positions today. There's some QQQ hedges. So again, you can enter your phone number, get SMS messages. You can see these orders and positions, right? If you're a subscriber, and you can participate in live trading room, right? There's a live trading room every day, and there is also recording, right? You can go into recordings and watch the recordings of all the strategy roundtable, active live trading room, you know, investor workshops, right? All of that is on the recording. Or you can go to AI analysis and say, okay, you know, I'm an NVDA buyer, right? So I want to know what, you know, what your predictions for NVIDIA, right? Even though it's not a signal, but what does the AI think? And you can find, right, it'll tell you, you know, next 10 days could be 185, but short-term overbought, and, you know, potentially could get to 160, maybe even 130 level, 40 level. So that's AI analysis that you also have access to. Earnings power trader is where I do earnings. Actually had a great trade on Oracle, right? Sometimes I look for these outsized trades. So I'm pretty proud of that. You can find these trades performance. You know, I put on Oracle for, you know, debit of, you know, I paid 10 cents, right? I bought a call spread and financed it with the credit put spread. Sometimes I'm long volatility, sometimes I'm short. So it just depends on options data and the model. But Oracle, I sold the put spread, bought the call spread, you know, net cost was 10 cents, and the stock, you know, moved, I mean, 2 standard deviation to the right? So I was able to close this $2.50 spread for $2.40. So I'm looking for these outside returns. Obviously, they don't happen every time, but, you know, the idea is by looking at the options data, I can improve the probability, improve the alpha. So even though it's a 2 standard deviation move, but it doesn't happen only 2% of the time, you know, maybe 20, 30% of the time. And then this week, FedEx, right? So FedEx announcing earnings, I think Thursday after the close. So I will either trade FedEx or Leonard, right? These are the stocks that are announcing earnings. And these are usually option spread trades. And finally, Profit Accelerator. Profit Accelerator is where I trade stocks. A lot of people more comfortable trading stocks only. So you can see orders, positions, you get emails, SMS messages, and same thing. You can trade options using Apple, or you can buy Apple stock. So in this case, I'm buying Apple and Micron stock. Any other questions? All right, Charles, George, Abraham, GT, Dr. Simon, Ron, Tim, Chuck, Wanda. So you can see a lot of positioning right now at 6,600. Both put wall and call wall, meaning highest position. You can see market is glued to 6,600. Right, market is glued to 6,600. But tomorrow, we could be at 6,500, right, or we could be at 6,700. You can see Bitcoin has been underperforming, right? So you see underperformance in Bitcoin, which is concerning, right? There will be a bearish argument. Usually Bitcoin has been a good proxy for risk taking. So market, QQQ is making all-time highs, but Bitcoin is underperforming. So that will be a bearish argument. Same thing with NVDA, right? This is I think it's still largest, right? $4 trillion company, pretty heavy weight in the QQQ and semiconductors and spiders, and it's also struggling, right? You can see 20-day moving average is descending, 50-day moving average is decelerating. We're trading right at the 50-day moving average. So NVIDIA is underperforming, Bitcoin is underperforming. So that would be our bearish argument. China emerging market, right? Weak dollar. Main beneficiaries are emerging market. We have position in Taiwan, ETF, Hong Kong, Vietnam, or just EM. Seems like a one-way trade, right? As long as the dollar is weak, I think that trade has more room to the upside if you want to diversify away from United States. What else is interesting? We talked about dollar, high yield, so that's bullish. High yield is strong, VIX is low, all of that is bullish. Broadening of the rally, you have small caps reaching 2024 all-time highs. Finally, regional banks catching a bit, 2024 high. So all of that is bullish. I mean, you can see that already into the Fed meeting, people are concerned. So KRE is selling off. I think home builders also under pressure, right? Home builders pulled back. So you can see people are concerned about how majority of the people are going to react to the Fed announcement. So going back to the difference between trade spoon and yellow tunnel, we're trying to go back and cover more kind of psychology. Psychology is very important, right? Learning about yourself is very important. We're all going through a different journey as a trader. Some of us at the beginning, some were in the middle, some were more mature. Some of us traded for 25 years, some of us traded for 2.5 weeks. So it's very important to have custom trading plan. So we do offer custom trading plan. You can sign up. I mean, it requires financial commitment, because it's a one-on-one coaching program. So you have to pay for one-on-one classes. You also have to manage money. So, but if you're serious about trading and you're looking for that custom trading plan, you're looking, pick up a phone and call some professional coach, right? Professional trader that can help you to improve your results, then I would, sign up and click on coaching program for sure. Game theory is important, right? If you don't understand game theory, or if you haven't heard that concept, I encourage you on the website. We have articles, videos on game theory. You can do it on the internet. But the game theory ideas, it's not really important to predict what you think, right? A lot of people say, don't trade what you think, trade what you see. Because what you see is what majority of the people are doing, right? That's where the supply and demand is. If you trade what you think, but no, less than 50% people think like you might be right. But if majority of the people don't share your opinion, then you're not going to be profitable. So idea of thinking about everybody in the stock market, the dealers, the hedge funds, the sovereign wealth funds, what they are thinking, they are the one that drive the liquidity and they drive the money where it's going next. So game theory is important. The idea is to avoid fight or flight response, right? So you don't trade on emotions. I've been trading these spider spreads, and it's a very well-defined trade, right? You know exactly how much you can make or how much you can lose, right? So this is a dollar spread, right? So this is a good, this is a good learning experience because you can see I sold a dollar spread, right? I sold 661, 662 spread for 40 cents, right? Yesterday I sold 660, 661. So I sold it for 40 cents, closed today for 22 cents. So my maximum profit was 40 cents. My maximum gain was 60 cents, right? So I made, 18 cents over 60, so roughly 30% return overnight. But I know the maximum I could lose is 60 cents, right? So then it becomes, what's your relationship with money, right? If you do one contract and $60, if it's your, weekly salary, right, then that may be an excessive. If this is how much you pay for coffee, then maybe it's okay. So we're all different. So when people say, well, I get anxious, or I get worried about, then you know that position size is incorrect, right? I mean, you can do one contract, you can do 10 contracts, right? You can do 100 contracts. So obviously, if you see that you're getting anxious and you're glued to a computer, then maybe you need to adjust your position size, right? So the economy of control is important, understanding, not concentrating what other people think, but concentrating on your own actions, right? Position size is the number one action you can take, right? Doing these positive and negative visualizations to avoid fight or flight response or being anxious, right? That position size is extremely important. And treat trading as a business, right? It's all about compounding investment, right? I mean, 30% or 18 cents, $18 might not be enough. Might not be enough to make a difference in your life. But if you make $18 every day, right, and 5 days you made $100, right, and 52 weeks you make, $5,000, and it was $10,000 account, 50% return, well, compounds, right? Then all of a sudden, even 20 cents a day, right, or $20 a day could make a huge difference on one contract, right? So, some people say 20 cents is not enough, but I would say if you can get 30% return on the risk taken, and you can consistently, right, be correct 70-80% of the time, that compounding investment, that take a long-term view of the money and your relationship with the money, right? But treat it as a business. Set the goals, weekly goals, monthly goals, annual goals, quarter over quarter, year over year. Make them simple goals and easily achievable goals, right? If you say, Vlad, I want to make 200% every day, that is a great goal. It might not be easy to achieve it, or especially consistently achieve it, right? Maybe you started with 20%, right? You start with 20% return on risk taken, right? And set the goal of being correct 70% of the time, and make 20% return a year, 50% return a year, but something that is achievable, small. And then as a business, as you get more comfortable and confident, then you start raising the bar, right? Because if the gap between what you want and what the reality is very wide, this is when we get anxious, this is when we get disappointed. So you want that gap between the reality and your desire to be, achievable. Right, and practice. It takes 7 times to internalize information. I go fast. If you want to learn more, watch this video 7 times. Come to live trading room 7 times. And I think some of these concepts will start making sense. All right, 12:35. I think I covered most of the content that I want to. Any questions? Any questions? ICOs. Well, my thoughts, since I ICO investment and sell crypto. For several top trending crypto prior launch. Initial coin offering method by using companies to raise funds for new blockchain projects. Is that what we're talking about? It tells you what my thoughts, since I don't. So in crypto, especially with new currency, I don't trade that. I do trade options on liquid, like Ethereum. I do have an opinion about Ethereum, and highly liquid ETFs where I can trade options. I have a lot of opinion, right? I mean, you can trade anything you want, and if options are liquid and bid and ask tight, then I do trade spreads on Ethereum, on Bitcoin. If we're talking about initial coin offerings, I mean, it's a gamble. To me, it's a gamble, right? I mean, I can go buy a lottery. I can make $1 billion, right? But you know, especially now. Maybe if you did it 10 years ago, 20 years ago, when nobody knew about Bitcoin, maybe. Now I don't have an opinion. If time allows, please. If time, Google. Right. So we talked about Google. It was a signal. I traded Google last week in the paid program. Google is breaking out. You know, strong momentum. I mean, obviously it's overbought. You know, maybe I wouldn't chase the Google at these levels, but I would wait for pullbacks. But you know, you can see out of the Magnificent Seven, Google is probably, you know, the best performing right now. Let's see what else. I mean, out of all the Magnificent Seven stocks, because I have them here somewhere on the bucket. Right, so NVDA is underperforming. Meta is consolidating. I mean, Meta is doing great. So you know, but you know, I think Google, Meta are one of the strongest. You know, Tesla still doing a catch-up. Microsoft has been underperforming. Amazon has been kind of consolidating, underperforming. So I think Google, but you know, short term, I think it's overbought. So I would wait for pullback. Chuck, Wanda, let me know if that makes sense. Tim, let me know if you have any other questions. All right, guys, you're wonderful. Thank you for joining. I really appreciate you guys joining, and I hope to see everybody in either live trading room. So try it out. You can go try out any of these services, all the pricing on here. And we do give 30-day money back guarantee. So if for some reason you don't like it, or it's not fits your trading style, strategy, then in 30 days we give you money back. So you can get free coaching for 30 days. If you want more expensive coaching, obviously one-on-one coaching, then you can just click here. All right, that's all I have for today. Thank you very much. You guys are awesome. Thank you for participating. Ron, Wanda, thank you. Charles, George, Abraham, JT, Dr. Simon, Ron, Tim. All right, guys, thank you very much and have a great day.